Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 4 o'clock in New York on Thursday, the 8th day of January 2015, and this is the daily report for gold and silver. We have a strong U.S. equities markets once again, pressure on the precious metals markets, and a stronger dollar. First to gold, currently trading off roughly $3.50, 1207.46. That's our current print on the screen. High 1216, low, and that's pretty critical. We'll be talking about that in a second, 1204.80. Silver also trading lower on the day, off about 20 cents or 1.21% lower. Current print on the screen, 1631 and change. The low is been right in this area, 1631, 1630, the high 1664. More on silver in a little bit. So traders, the first thing that I really wanted to talk about this morning is our current trade and really how I feel about it, what kind of follow through we have seen, or in this case have not seen. We are looking at a 720 minute, a half day standard candlestick chart. And we based a lot of this call not only on the fact that we've seen this market move up with a series of higher lows. We've gotten some higher highs here, but this last one, of course, we did not. But as this market came up, it definitively broke out above, I believe it was about 1217. That's roughly where we got in at, and hit a high as 1223. You can see that here is a 76% retracement, and it has come back down from there, roughly off about $10 from our entry price. It's not the $10 that concerns me as much as the fact that we didn't get any kind of follow through. And so when I look at this chart, simply put, I see a resistance line that is, without a question of a doubt, still resistance. You can see how this market has come down. So my question is, are we going to see this market now begin to trail lower, maybe to the bottom or the support level? We could still get a higher low here and then break out, or are we going to find a little bit of support and just break out? Now, that brings up the low of the day, because my sense is that if we stay above, call it 1205, that's the 61% retracement. And to me, that's a pretty critical area. Now, we currently have our stops just below 1200, but my sense is that if we see this market break much below 1205, I'll probably want to exit the trade and take the loss on the trade. I don't like losses in the market, but at the same time, every trade we take is a calculated risk. And if I don't see the follow through, if I don't see the market reacting in the way we had hoped it would react, we want to be able to adjust our strategy, take emotion out of the market, and deal strictly on the facts that are available to us at the time. So what are some of the markets that we are currently monitoring to get some sense or feel for where the direction of gold might be? The first thing I want to look at, of course, is the dollar index. Dollar is back up and strong today. You can see that it has taken out this secondary area. This was the area that I thought if we were going to run into some sort of resistance, we would probably run into it right at around 92. It's currently trading above that at 92.57. Now, you can easily see this triple top here. Let's go ahead and compress this some more. And then if I compress it, of course, you can see where this particular resistance area is plotted from. It's really this high here and this high here. So if it takes this area out, which at this point it certainly has, the next high that we're going to look at is going to come in, and it doesn't really come in till about 94, and it is based upon this top here. We've seen the dollar index, of course, much, much higher than this at different times, but when we consider that this is back in, 2004, we have not seen the dollar at this level for the last 10 years. Next, we want to take a look at the crude oil market. Now, it's absolutely off of the lows. This is a monthly chart. You can see these lows in here, I believe, around 45. Currently trading below 50 though at 48.95. Still tremendous pressure when you consider this is the 8th day of the month. We've got a pretty solid red candle there. Now, of course, as I said, that's on the monthly. Now, when we look at the daily, just to take a look at what we're getting today, you can see that this low was made yesterday. We hit this low again today. We've got a small green candle, almost doji-like. But when we consider the fall that we have seen in crude oil as it's come down, it's really, you have alternating days right in here, then a lower low, alternating days, lower low, somewhat of an alternating. So you do get these green candles in here even as the market goes down. So the fact that we've got a little bit of a green candle here is not really showing me anything just yet. And really daily is, unless you're trading this market, is not the way to look at it. When we look at weekly, you can see that this is still a tremendously lower market compared to where it was at the beginning of the week, because at the beginning of the week it was above $50 per ounce. That's on the weekly. And then, of course, if we go back to the monthly, we get the real picture of what this market's been doing, and it's been in an utter free fall for about the last half year. Lastly, we want to take a look at the equities markets. Equities markets runaway up, I believe, 300 points today. It is back at 2054. You're getting a very, very hammer-esque or an umbrella line type candle in there, really on our weekly, because you can see the low that it made down in here. But really the best way to take a look at the most recent activity in the Standard & Poor's is to go to a much more short-term chart. And this is the chart that I'm talking about. This is a half a day standard candlestick chart. One basic fib retracement. The fib retracement takes us from 1814 up to the record top at about 2090. And then when we look at this top here, the correction that followed, we got a pretty much, look at where this low lines up, but pretty much an exact 38% retracement of that move. This was the low, 1985, and look at the way that it has surged over the last couple of days back up off of these lows. So we do have our jobs report coming out tomorrow. If we have a strong jobs report, expect some follow-through or continuation in the strong equities markets. Strong equities markets is probably going to give us a strong dollar. Crude oil, we'll have to see what that's doing. But my sense is if we get this market back on a rampage, we should see the downside pressure in both gold and silver return to the market. And so in terms of what that does to our bigger picture, this of course being a 3-day chart spot market, and I draw our attention right now to this very, very strong resistance line, and we had a very strong rally. The rally started at 11:30 beginning in November, but there's no doubt it stalled out at this resistance line. So as I said, if we get any kind of break below 1205, you can go ahead and exit the trade. I do not have the same confidence in this market that I did when we put on the trade, simply because once it broke above that 1217, and that was that breakout point we were looking for on our shorter term resistance line, we saw zero follow through. And in fact, we saw this market kind of come up, hit that area, go through it just a little bit, and now move back down. And that's why I have a change in terms of my basic market sentiment. Overall, I've been bearish on gold, but I thought we might see some rally, especially when we saw it pop through that one area. This was a case where the best move was to zig instead of zag, which of course is what we did. So traders, in terms of our current resistance and support levels in gold, very short-term chart, 230-minute standard candlestick chart spot market of gold. One basic fib retracement, and that fib retracement is really from 1255 to the low at 1130. It gives us these different areas. Right now, we talked about 1205. Here's 1207. 38% retracement. This is that line in the sand that I really believe we need to hold above. If we cannot hold above this, my sense is that our real next level or target is a 61% retracement at 1178, and 1192 of course is 50, but I don't think that that's as strong, and then again 1160. So these are different support levels currently in the market. Critical one to hold of course is 1207. Resistance, well, we've got 1225 right in here. There's our 23% resistance level, and I believe 23 was the high on this most recent clip up. So we've got some real resistance here. And then, of course, the real area that we cannot be really bullish in terms of a long-term stance without a break above is this 1254, 1255 area, the most recent top here. And then this, of course, I believe is about 41. I'm not really sure. It comes in here at about 39 to 40. So these are the two tops that we really need to see taken out if we're going to have any kind of continuation of this rally, which really began mid or first part of November. And these are my current support and resistance levels. Silver. Silver is kind of a funny animal right now. And my sense is that if we see some weakness in gold, of course, we're going to see these two metals run in tandem. We've got this extreme low, this sitting at around 14. $16 per ounce. That is our current level of support. Our stop is just below that. Market's currently trading at around 1633. In terms of real resistance, 1720 is where I currently peg resistance in silver, although support is more what I am currently concerned with. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.